What is going on YouTube? It's Brendan from Market Makers. Really happy to bring you the most requested video from the YouTube comment section, the Tesla Deep Drive video. In this video, I'll show you how to set your terminal target utilizing Fibonacci waveform trading, and I'll show you how to track dynamically in the ever expanding and contracting marketplace the intraday movements of Tesla so you can set future targets for yourself as well. It's very important to understand the cycle that we are trading in. You guys know, watching this channel, this is a cycle of decay. This is a bubble cycle. Next year, I do expect a very strong recession to hit, and we could have our market bottom at some point next year. So having these targets, as we've been talking about since November of 2021, and all the different asset classes, having them hit spot on in many cases, for those of you that watch our Bitcoin videos as well, this is very important to profiting in this marketplace, and what most everybody wants is financial freedom. So guys, these techniques I'm going to show you, these are very advanced. I wouldn't expect you to learn them easily in a single video. I would highly suggest, if you are interested in this method of trading, to check out our Discord trading room. The link is in the video description. We are running a special for the rest of the year. The next few weeks, you can join our Discord for half off. It's $20, guys, to come get education, trade signals, and a fantastic community of the professional staff. We have harmonic traders, GAN traders. We have scalpers in the room. You guys would really enjoy it. It is something different in this space. Very, very cool place to be and be around other people with a like-minded mindset. Guys, this video is also brought to you by SimpleFX. Fantastic exchange to trade Tesla on, trade all the individual equities as well as the indices, Forex, and commodities on. Check out SimpleFX, link in the video description. I am the only person on YouTube they sponsor. I have a special relationship with them. We do a lot of trading there. We have hundreds of members there. Guys, you do get a $5,000 deposit bonus only with our link. Highly suggest you check them out. It is a CFD exchange. It is decentralized. You don't own anything there. Your contracts are sent out via liquidity brokers. Fantastic exchange to trade on. They cannot trade against you. Okay, so definitely check them out. And let's get into Tesla. All right, guys, so on my screen, you see the GAN fan. We are going to talk about some GAN concepts. We're not going to go over fans in this video. I do have a separate GAN fan video. It's one of the most viewed GAN fan videos on YouTube. You can go on our channel, type in GAN fan. You will see the video. We'll create a playlist and put that in there as well with this Tesla video and future target videos for you, okay? But the key concept here in the GAN, laying out this fan, is that 45 angle. This is segregating the market from bullish to bearish, okay? And we fell below, obviously. Let's go ahead and delete this because we really want to focus on fibs and waveforms. Let's look at price here. So understanding natural law trading, again, something you're not going to just grasp completely watching a single video. I've spent many, many years reading many books written by many different authors from WD-GAN. That I have every single article Charles Dow has ever written. He never wrote a book. Many people don't know that. He owned the Wall Street Journal. He published a lot of editorials, and I've collected every single article he has ever written. And you know, and I also have read extensively on Wyckoff, including having Wyckoff's private seminar class that he taught. So this is the backbone of my trading style. But let's look at this, guys, because understanding natural law, understanding the market moves in threes, and we have a great starting point here from the pandemic low. Again, this is a macro market movement, okay? This is nothing to do with all these intraday, intra-week retracement levels. We're looking at a macro market three-wave impulse. You guys have seen me do this on Bitcoin as well. This is a forecasting methodology, okay? WD-GAN did 3 impulse waves, and essentially what he didn't call an ABC correction, but an ABC correction, showing that the market moves in a wave of 3 impulse waves, ABC correction. That law of 3 is present everywhere. Head and shoulders patterns, ABC corrections, 3 candlestick reversals, 3 rising valleys, 3 falling peaks. The list goes on and on. So let's look and see what we have. We know what we have: this impulse wave. We got our blow off top. We have $6 trillion printed in 30 months, creating massive asset bubbles in all of the equities, in the cryptos. And now we're in that cycle of decay. As Plato said, The cycle of decay and the cycle of growth are one and the same. So let's look at where we could get this target from. That wave 3 is what you want to focus on, the wave up to the blow off top. Okay, and you can see this in multiple asset classes. Now, what a lot of people do is they would take the extreme low for a fib retracement up to the extreme high. It's not the correct way with my methodology that I use the actual fib retracement. Okay, we are looking for a waveform, and the actual waveform here is this pivot out all the way up to this top. Okay, that pivot out to the top, and that gives you 38.85 at the 1618. How effective is this? Well, let's look at this, okay? Because what you're doing with a fib retracement is basically mapping out a divine blueprint for the future movements in the marketplace, and you can zero in the smaller time frames, smaller subsections, and utilize fibs as well, and look for fib confluence. But what we're doing with this waveform trading is quite simply, we're going to double check this. You're looking at your 382 being hit multiple times. Yes, indeed it is. Looking at our 618 being hit, having some turbulence here. Indeed it is. Looking at this future double top that printed beautifully, utilizing the 618 as support at 271. So that looks really nice. And of course, a key concept many of you are probably not familiar with is a geometric mean. The 618, if you view this as extremes, the 618 one extreme, your 1618 is your other extreme, the golden ratio phi, as the Greeks would call it. Your geometric mean, the uneven mean, the uneven line in between these two, is the 1 fib. That is your geometric mean. Arithmetic mean would be you have three quantities, 4 apples, 3 apples, 2 apples. You add them all together, divide it by 3, that's your mean. This is the geometric mean, okay? It's not going to be even. It's not an even division between the two lines, but your geometric mean is what the Greeks called the golden section. This is where mean reversion would take you. And if you notice here, just looking at how this laid out, your waveform started on the geometric mean. And where's price now? Resting at key support at the geometric mean. Your 200, 233 just beneath you here. Losing 182 would be catastrophic, falling below the 200, 233. If you start to hit your head here, you will have a natural law bias to come down in a descending market to phi, the 1618, okay? The 1618. So right now you are trading at the mean here for Tesla. Losing this would be very bearish. Let's go ahead and look at this on the daily. Maybe you'll get the concept a little bit better. Let's go ahead and zoom in. I'm going to show you some Wyckoff concepts with this as well. When you're looking at waveforms, guys, large waves matter, and the confluence within the smaller waves matter as well. Again, many people will just take an extreme low to an extreme high. The proper way that I would trade this for Fibonacci is like this. This is your wave up, okay? And I'm looking at my retracements, and what I want to see here is, are these retracements valuable? When I'm looking at the support level, look at your 382. That's beautiful. Just stacks and stacks of candles. Big capitulation candle down. Lots of turbulence here. Choppy. Kicked off here of the 764. The 764 is not a fib. It is a fib mirror. I'll get into that later in some other video. But I do utilize the 764. And then looking at this as well, all the turbulence down here, hovering around what, guys? The geometric mean. This is where price wants to be. Either getting rejected from here with a bias to go down to phi, or coming up with a bias to test the 618, okay? So this is where you're at. Now, of importance, and the reason I'm showing you this, is look at the 0.5 fib. Look at how it captured these three tops right here absolutely beautifully. Reason I'm showing you that is because this is just one simple fib retracement, and this is measured for price moving downwards. But when you're looking at confluence of how price moves, you can measure this for price moving upwards to resistance as well. Here, I'll show you. Let's go ahead and take this off. W.D. Gann, a key concept he wrote about, not many people know, is oftentimes, he said, you don't find the best support or resistance using the absolute high. He often preferred to use the secondary swing. In this case, I want to show you this as well because, again, for waveform trading, this gives us a big downward move here in the secondary swing. Now, again, I'm not dragging this to the absolute bottom. I'm dragging this to where the wave actually ends. And again, this is subjective, guys. This is why it takes practice to learn this, to understand the key concepts of this. Look where your 618 is. You see your 618? 311.58. I want to show you why this was important to understand how to waveform trade, okay? Why you need to understand that concept of price moving at a vibration, and finding that vibration, finding that blueprint in the market with Fibonacci will give you high probability trades. So this is measuring your resistance for the upward move. You can see how beautifully this tracked with your 618, your 382, your 0.5, all of them being hit very beautifully. Had we kept this waveform here as well, on this upward move, again, not going extreme, but measuring the actual wave, look at where your 0.5, I don't know if you can see it here, see your 618 here in yellow? Your 0.5 and your 618 captured. They lay right on top of each other. Two different length waves layered right on top of each other, the two most important retracements in the market, the 0.5, which Gann and Dow said is the most important retracement, and of course the 618 for Fibonacci, layered right on top of each other. Here, let me show you that one more time. I'll go ahead and delete this, and you'll see it more accurately as I lay it on. Watch the 618 here at 311.58. Using this waveform for this projection, for the retracement, you can see it turns white. Okay, the 618 and the 0.5 laying right on top of each other, right there at 311. And again, the reason this is important, why would you say is that important? Well, this trade up here, knowing that this is confluence for Fibonacci resistance, very strong resistance with the two most important Fibonacci levels, this last point here where you could have shorted it, where it failed, gave you a massive down move in Tesla. How big? Well, that was a 47% drop, knowing you were at key Fibonacci resistance on a large time frame, the daily time frame. Okay, the daily time frame is a gold standard for tracking everything from volume divergence, MFI divergence, and of course Fibonacci confluence as well. Let's go ahead and delete this. Let you guys see this as well. Oh, let me get rid of these drawings. All right. Something else to note here. Go ahead and take that off. Just this first fib wave that we captured here, look where your 1618 got to. You see this? Phi. Okay, you got to the 1618. You hit it, you bounced off it, fell below it, you're coming back down to it again. This is going to come into play, but guys, this is where we start marrying different concepts together, including Wyckoff. So we have our downward projection targets that we have here from this fib wave. Okay, if we have our downward projection, go ahead and take this off. When I'm looking at Wyckoff here, we know that this is where we ended that one wave. This is then you have the move back up and then the rollover in the marketplace going sideways. You guys would know this is Wyckoff accumulation or distribution if it was to descend further. So we have our selling climax coming back up. Our automatic reaction gave us a range. We have up thrust in the range. I'm going to marry all this together for you. You have up thrust in the range. You have down thrust, signs of weakness. And then what do you get here, guys? You get a move back to the upside. You've heard me refer to this many times, your Livermore pivot to the upside. Okay, you get your Livermore pivot, and this cycle will then repeat itself. Now you have your buying climax candle, right? And then you have your automatic reaction from the buying climax candle. And then what do you have on the flip side? You have your Livermore pivot retesting your base, failing, coming back down. Again, it matters that you understand the market you're trading in, the cycle and the primary trend of that market. You would be looking for these breakdowns. And you can marry all of this with your Fibonacci confluence, okay? The Wyckoff just repeats itself over and over again, the steps that are necessary, as well as with the fibs. And here's that fib wave again to that upside, okay? You have your Wyckoff line literally draws right on top of the 618, which draws from the previous wave right on top of the 0.5 fib. Okay, that's how tough that resistance level is. And then you can see your capitulation once you fell apart. Now, if we're going to zoom in and continue to go down, and don't be upset if you cannot remember or learn all these concepts. Again, this is 20 plus years of trading and reading dozens and dozens of books, many of them geometric trading math books. Not a very fun topic, guys. But when you want to start looking at these smaller waves down here, how can I get these targets, right? How do I get these targets? One thing to remember that with Fibonacci, the 1618 will reappear multiple times as support and as resistance. So just for example here, if we're looking at this impulse wave up, your 1618 was hit both as a target, right? And then utilized again as a clear resistance level. So when we look at this and we just work your way down through the price, utilizing this fib wave, and this is where you stand right now. Now, this is current price action. So based on what I told you before, your 618, you're at the geometric mean, your 198.59, you bounced off of it, you come back down, go back below the 1618, bounce off the geometric mean, and it looks like your bias is to come back down and test this. And of course, you marry this with confluence from your weekly time frame, which has that key support level of 182.33 with your 200 and 233 just beneath you. So this is a very active area for price with a lot of support. When you start looking at how you can measure this, I want to show you how the 1618 can start stacking up. Okay, let's just go ahead and take a fib wave from a larger wave. This is a very small wave. Let's take a larger wave subset. Okay, so we're going to take a beginning of our pivot out up to that high. Look at your 1618. This 1618 was also hit. You want to do another one? We can take another fib wave, again from where we previously took a fib wave projection. Pivot out up to the top of our wave. Look at your 1618. This is called Fibonacci confluence when this happens. Three extremely different sized waves, three different measurement projections. You have three 1618s all stacking on top of each other. All three, by the way, were hit as well. You have confluence with a larger time frame here on the weekly time frame with a key support level of your geometric mean, as well as your 233 and your 200 beneath you. This is what you need to understand about this price action. When this does capitulate below this, these 1618s, these areas of confluence that are acting as support, will become areas of resistance. Okay, so this is what you want to look at when you're looking at 178, 174, 170. All of them are below that 182 level from the weekly time frame. So just understand Fibonacci works in amazing ways when you understand the concept of waveform trading. Okay, and this is very subjective. You have to practice it to really grasp this concept. And as the market descends, you can take more and more wave projections as the price goes on. And then obviously you would start marrying in your volume, utilizing your MFI, looking for things like volume divergence. You will find very high probability trades, which is what all of trading is about, guys. Wyckoff, Gann, Dow, in my opinion, the holy trinity for the trading concepts that are utilized 100 years ago and are extremely valid today and a very powerful trading tool. So I hope you guys enjoyed this video. Let me know if you have any questions in the comment section. Definitely consider checking out our room and supporting our channel by checking out our sponsor. And all right, guys, I'll talk to you on the next video. Enjoy.